Yeah, this is David Skrika here. So we're ready to go here. We're ready to so I'm doing this on Friday, and this is actually going to be my new basically thing I'm going to do is because I'm going to keep these stock chart I'm going to do 7 days a week, man. We're going full bore now. Unless I got something that really comes up business wise or some emergency at my house here. Basically now, I would say to the end of October, we're going to do 7 days a week. And what I'm going to do on Friday is obviously I'll put mine out Friday morning, and then I'm just going to do what I'll probably do is do my Friday stock chart of the day Thursday night. And then Friday, I'm going to do the Friday, Saturday, Sunday. And, have it, and actually even Monday, I'll do four because, the Monday I'm going to usually put out before the market opens. So there's no, it doesn't really matter what's going on. So that's what I'm going to do. So I'm doing the, Friday, Saturday, Sunday, the Saturday, Sunday, Monday ones right now. So the first thing we're going to look at today is we're going to look at oil. So we're going to look at the oil ETF to start. So we're going to look at here, and we're going to see that oil is breaking out today. Up 2%. It's up to over $85 a barrel. This is, as I'll show you in a second, 85 is really key. This is the 3-year chart. And you can see this kind of beautiful, after the Russian invasion, the spike into that, the top into that, this beautiful kind of saucer type pattern, and now breaking out. Dollar's going up, which is interesting. So oil's going up despite dollar strength. And I think it's just a supply side issue. Big oil producers like Canada and the US are seeing no new investment because of ESG policies. Also, the regional banks in the US were a big part of the fracking boom for lending. I think the number of rigs that are out there right now are 40% lower than they were at the pre-2020 kind of COVID collapse in oil. So that just means less exploration, less supply. So it's a really supply side story. And we're still seeing very strong economies in Asia in the emerging world. Sorry, just got something in my throat. I apologize for that. I'm having a glass of water right now. But anyhow, so I think that oil is going to continue to move higher because of this. So it really looks like an exceptional chart. And if we go back, let's look back longer. Okay, well, this ETF only goes back to here. So we'll get the actual oil price. Now, the reason I showed you the ETF is the oil price is not updated to end of day. So it looks to me like, this 2001 reason we had the fracking boom is this in 2011 to 2014, oil spent most of that time between 80 and $110 a barrel. So that's what caused it. So what they're doing now is, that's another thing that's so stupid about them selling the strategic reserve off so aggressively, is that essentially they're reducing the price of oil also decreases the incentive to explore, right? So if oil had been over 100, which it probably would be if they hadn't sold off the reserve, there'd probably be more exploration going on, but there isn't, combined with the policies and that sort of thing. And I told you the regional banking problem. So it looks to me like here oil could definitely be heading back to that kind of like $100 a barrel area. And of course, that's not good for inflation. That means that interest rates will stay higher, et cetera, et cetera. So one stock I really like is Athabasca. And you can see that, this was a stock we actually bought at 10 cents in the newsletter, or 10 cents, and I sold it too early. I sold it like 40, 50 cents. But I've bought it recently because it's so cheap. It's trading at only, something like 4 times earnings. You can see it's up 4% today. Like, this stock can easily go back to where it was. If you go look where it was when it came out public, I can go back to $15 to $20 a share ultimately, and like I said, there's probably underinvestment in it because, again, ESG policies, there's not institutional money, but money will still flow into this. And I really like the oil sands companies. So of course, the major one is Suncor. And you can see that Suncor, if it can break first like this 35, 36 area, and then like 40, you're talking like we can go back to all-time highs in Suncor, then higher. Because what I like about oil sands in Canada is there's a lot of potential wind at their back. And what I mean by that is that, first of all, politically, if the Republicans take over in 2024, Trudeau was ousted in 2025. Everyone's going to be pro oil and gas drilling. So pro Keystone. So that means Keystone comes in and boom, all of these oil sands companies can ramp up productions and ship it on the pipeline. So that is like awesome. Because right now what's limiting their production, they don't have a way to really get it out of it. They've got to put it on railroads. They got to put it on, on oil tankers or sorry, oil, oil trucks, that sort of thing. So there's no real way for them to get rid of it. Alberta is landlocked. So this will really, I think, cause a boon. And I think what the frackers did in the 2010s, these oil sands companies can do in the 2020s. So anyhow, that's our stock chart of the day. It's the breakout in the oil price. And I hope you enjoyed it.